This is your market recap for April 28th, 2025. Today kind of confused me, I'll be honest. Higher time frame I was right, but the lower time frame, especially AM session, um, kind of tripped me up today. So to start off with, I was bearish on the day, one because we were overextended coming into an AM session, and more so the fact that yesterday's Friday did not do the 20% TGIF retrace, which usually means that Monday gives us a solid retrace. So I was playing off of that. If we go down to the hourly, so I was short, right, which ended up being correct, right? This red line here is market open. We went down. Um, you'll be able to see on the lower time frames why that is, or why I was wrong. But to start with, one of the reasons I was wrong is because I failed to, I guess I'd say, see the importance of this hourly fair value gap right here. Don't even know what it's drawn on right now. Yeah, what in the world is this even drawn on? Okay. That's how it should be. So if we look here, we have this imbalance, and overnight it was respected, right? So that validates it, in my opinion. It validates it as a zone that is likely to be reacted off of. And right before market open, the 8 o'clock candle closed, right? It closed above this hourly fair value gap, which had been validated to the downside. So price rallied, right? Market opened around here, and we came down. I saw this, as you can see, a big SMT here on the lower time frames. It'll make more sense. I thought since ES didn't take out this high yet, and we had that SMT, that we'd go down, right? But it seems like um, the hourly first wanted to use this hourly fair value gap as an inverse to come up and take out these highs before it headed lower, which was weird to me because if you look, the hourly even closed below the fair value gap. So it reacted off of the hourly inverse fair value gap enough to take out this high, but then it disrespected it. It was kind of weird in my opinion. But from there we came down to this 15-minute inverse down here, which you'll see on that time frame. Rally, market closes, we meander down, fill this, and continue our upwards trajectory. Um, yeah, you can see it a little better. So, not the SMT, but trust me, there's an SMT here at the time of market open. Um, so yeah, SMT of market open, price ran down. Like I mentioned, hourly candle closed here above this blue fair value gap, which is that hourly once again. I'm going to bring it up a lot because the whole day kind of revolves around it. Um, so market opens, we come down. Me thinking we're bearish with this high time frame SMT up here felt good. I felt good taking a short. Um, but we reacted off this hourly fair value gap, played bullish, took out this high, immediately came lower. SMT here causes us to retrace. Macro forces us down. This 15-minute inverse, well, you ask why this one compared to this one? Well, if you look, this one, there's no nice closures in it, right? We might have one here, but this one we have one here, two, three, a ton. Top, bottom, concentric encroachment. This one is more of a hot spot for the algorithm, I'll say. And so it breaks above it. And since we know that we're playing bearish, if we're not taking out this low, we're most likely going to reverse here. This is like the last line of defense before we take out this low. And that we do, we react off this 15-minute, play bullish, taking out this high, and continuing from there. Here you can see it better, 5-minute. SMT, right? This is where market opened. Market opened here, rallied, ES took out this high with this rally here. So I saw that, boom, SMT, I'm high time frame bearish, I'm entering. So I entered. There was this 5-minute inverse, once again validated with this closure and retrace here. Boom, exploded out of it. Bodies respect the middle and the low, rally up, take out this high, get rid of that SMT. Macro starts, pushes us down. Again, SMT at these lows retraces us, kind of kill a little time, waiting until the next macro, which hits. And then we come all the way down here, taking out this low, reacting off this 15-minute inverse for value gap. Closes the low, closes at 75%. If we just eyeball it here, look at how nice that is. And then we play bullish out of this, targeting highs throughout the day. Now, let's get more in depth into my entry. Like I mentioned, high time frame bullish. Sorry, that's just not right. High time frame bearish. Big expansion here since 8. I'm looking to play bears from there. That along with the TGIF not happening, like I mentioned. So market opened, ES rallied up here, took out this high. Obviously NQ didn't. I saw this as a huge time frame SMT. And so as soon as price broke down, it kind of took off pretty fast. So once it came back, I entered. Price consolidated and then took me out. SMT of these lows here caused this move here. Now, I think the big underlying reason why this happened this way is the hourly time frame. The hourly candle, bringing it up again, closed here, right? So we disrespected this blue hourly zone. And so with that in mind, we're playing bullish. And if we're playing bullish, what is the draw? Nearest liquidity. So we go and get that first. We react off of this inverse, 1 hour inverse. We also react off this 5-minute inverse here, stopping me out, rallying all the way up here. Tiny SMT, if you want to call it on such a low time frame. Macro starts, pushes us all the way down here, creates another SMT of these lows here, which causes the rally. Equilibrium of this bearish move is this line right here, which price perfectly dances around. SMT of these highs maybe. Technically, these highs are even. It's 19,539 and a quarter, and this one is also 19,539 and a quarter. So if you want to take that, changing the state of delivery bearish, you could get roughly a 1 to 20 if you have profits on this 15-minute. Another reason we got stuck here is because just look at all this price. This is very balanced, and it's going to take a very large move to get through that. Does this look like a large move to you? Does this look like a boom, like a big move? It doesn't. It's just not going to happen. The way I think about it is this over here is one of those really big redwood trees. You know, those huge ones you see in Canada. And this is trying to hit at it with an axe. Not going to work, right? Now, if we had a chainsaw, which just went all the way through it, perfect. But we didn't. So we ended up reversing, which leads me into the trade of the day. Reacting off this 15-minute, we get an SMT of these lows. This is actually good because ES took out this low. And what do we know about PM session? It likes to take opposing liquidity before it moves its true direction. So ES took out opposing liquidity. NQ didn't. Gives us this SMT. Changing this data delivery on the 15-second. 15-second for value up. Higher time frame bias given this inverse here and this price action here, and just a higher time frame bullishness after we fulfilled the retrace. Target highs all throughout lunch and AM session. Finals being here, that would have netted you a 1 to 23. Last hour of trading, rallied up targeting these because it didn't really make many lows here. Didn't really make many. But once it took it, it started to come hunt these sell stops right there. So looking into the future, I believe the rest of this week is going to look fairly bullish. I think we have potential to reach this week. This is a bit of a stretch, but I think we'll definitely be able to get that. We are fairly extended once again. Retrace expansion throughout the day. Maybe reaction off this high causing another retrace. At this point, it really depends on what London gives us. If London expands heavily into New York, we're going to be playing bearish. We're going to be playing the retrace. But if London session reverses and starts playing bearish, well, then I'm going to play bullish, right? It all depends how much gas is in the tank when we show up for AM session. So um, just be on the lookout for whatever pre-market and whatever London session gives us to work with. So this has been your market recap for April 28th, 2025.